Good evening and welcome to the Lock in Your Success Trade and Market Update for September 7th, 2012. We were saying last week in our market update that we were expecting sideways movement in the market this week and possibly bullish towards the end of the week, and that's pretty much what we got. We were also saying that we were longer term bullish. Well, from what I've seen last week, we pulled down to this 20-day moving average, and I was kind of expecting more of a bounce off of this, or to put it more accurately, if we got good news, we would get a significant up move here. The bulls would step in and push this thing higher. And we got that good news on Friday, and the bulls came in, but they were hammered right back down by the bears. So this kind of makes me a little bit more leery of my bullish posture and puts me more in the neutral camp. And this is because although our long-term charts are still very, very bullish, the short-term charts are starting to weaken down a little bit, and it's just kind of an indication that the market may turn around. So I've switched from being overly bullish to a little bit more neutral. I'd expect a little bit more sideways action this week. Like I said, we had that good news on Friday. Bulls couldn't push the market up. So if good news isn't going to push the market up, we're basically going to have to wait and see if we get some bad news and if that pushes the market down. If not, we're just kind of at a stalemate for a while. One of the interesting things that I've seen lately is if you come to this, your up volume versus down volume, normally, let's just back out on this chart a little bit to a daily chart on our up volume versus down volume. Normally, we get some pretty good swings all the way up here from our up and down 10 would be, if we had a really bullish day, we see numbers up in here. So if the Russell went up 10 or 15 points, you'd see numbers up in this range. And when you get a bearish day, you'd see them down in this range. Look what's happened over the last 3 weeks. We've just had nothing. Anything that's pushing the market around has just been from a very slight imbalance. So I think that's kind of interesting. It's very rare to have this much up volume versus down volume be this tight. So I think that's kind of interesting. I'm thinking with a lack of any scheduled news this week, unless something surprising happens, we're going to see more of the same. We're just going to see this very tight range here in up volume versus down volume, and we're going to continue to see relatively small amount of market movement and more or less neutral. So I'm not expecting any big moves this week. We shall see what happens. Obviously, the SPX takes a high volume shot over this high, then that's pretty darn bullish, and I'm back to my bullish stance. And this is looking like almost a head and shoulders pattern, topping pattern here on the SPX. You can see it on the NDX. You can definitely see it coming in and forming. You can kind of see it here on the Russell a little bit too. We got the same thing. The SPX is looking a little different. It's definitely stronger. And for the strongest of the indices, we have the Dow, which actually touched a new multi-year high intraday on Friday, but it backed off from that high. So the SPX and the Dow almost look like they want to break out. The NDX and the Russell look like they want to break down. If you look at the biggest component of the NASDAQ, which is Apple, that's also had a head and shoulders top. It looks like it's possible it may want to break down. So we have very, very mixed results, and usually when you have very mixed results, you have sideways action. So that's what I'm planning for the week. Let's take a quick look at our trades. The first thing I'd like to mention is that we ended up closing the October M3 trade at a reduced profit target of $2,000 is what I got out of it after the commissions, and I was perfectly happy with that. We have extremely low volatility. We had a very short amount of time in the trade, and realistically, as I said last week, if the trade was up $2,500, I was just going to take it. Markets were looking bullish midweek, like the market was going to go up. That wasn't good for the position. We were up, I think, before commissions about $2,300. So just went ahead and exited the trade out, took my $2,000 profit, and we jumped into the November trade. So that was October. So it was a very successful month for October, we had wins in the Bearish Butterfly, about 2/3 profit target, or a little, I'm sorry, I think it was a little more than half full profit target, and much better than our reduced profit target. And we took a smaller profit on the October M3, which is wonderful. So on to November. Let's take a look at the November Bearish Butterfly, which was the open trade that we had. If you remember, I got what I thought was a very good entry on this. I was actually hoping the market was going to push this a little higher, get a little more overextended, and be able to push me into 2/3 on this trade. The market kind of died out, and we just made a pullback, so we only made it in 1/3. But it doesn't look any better than this. We're just sitting here watching the time go by, and it's very, very easy trade. We're well over our reduced profit target. If you look, we are now 39 days from expiration, so we still have a lot of time in the trade. But this is looking fine. This is looking good, and I'm perfectly happy with that. And as far as the M3 trade goes for November, I entered that on Thursday, I believe. And if I bring that in, what I did is I purchased 10 8-10 put butterflies and 2 750 Russell calls. Now, this position here, I was timing the market when I entered, and I was wrong. So I do this sometimes. People ask me, well, do you always put the call on right away? The answer is 95% of the time I do, but sometimes I'll try and time the market a little bit. When I put this butterfly on, I could have bought this call at $89.30, and I was watching the intraday charts. It looked like the market was kind of in a downtrend. It looked like it was going to reverse, come back down, but it didn't. So something happened today, and we kind of shot up. So I hit my point. Whenever I make that plan to time the market on my call, and I need to pick a point when it goes bad, that point was $92. I had the order in to buy this at $92 when the Russell hit a certain point, and it did do that. So I ended up doing that. So that cost me $600 on my entry, which isn't a big deal. It's like I said, it's technically a $5,000 profit target trade. I would take a reduced one of $2,500 this month because the volatility is low. So the butterfly, I think, was an extremely good entry. I kind of did not time the market right for the call entry, and I got bit for it, which happens sometimes. But all is good. We are only down $50 now. So, or at least that's what's indicating when the market opens on Monday. So I'm perfectly happy with that, and we should be able to make that money up without too much of a problem. So both trades are positioned well, and we are heading into November. And that's all I have for now. As far as the market and the trades, we shall see what the market brings us this week, and I will keep you updated with any changes. Thank you and good night.